I'm Linda Fox in the Phocuswire studio at Phocuswright Europe, and I'm with Nick Cox, and he's with a partner with Velocity Ventures. Welcome, Nick. Great to have you here. Now, you're Singapore-based, but you must be keeping an eye on kind of global funding trends for travel startups. And we've noticed from our interactive database that funding is down in quite a significant way for the first 5 months of the year.
Yep.
There's less deals being done, although there is some question about whether they're actually being made public, that they might be being done in the background. But what's your overall view of what's happening out there?
Yeah, I think you're right. Funding is down in our industry, but it's also down across the board. And something we obviously think a lot about. We're worried not only about the portfolio companies we've invested in and where's their next round coming from, but also what's next for our business. And to go into the reasons for that, there's a lot going on in the world right now.
Absolutely, quadruple whammy.
That's right, it is. And you've got the whole macro story. One of the things that we're noticing a lot is just delayed decision making as a result of people just being unsure of where we're at.
Just sort of due diligence.
And boardroom paralysation, where boardrooms are finding it much easier to just sit and do nothing than they are to take a risk at a time when it's very hard to assess risk. And so there's that. I think the other thing that worries us, particularly in Asia, is the lack of exits that have gone on in our industry.
Right.
And there's not a lot of track record of good exits. And I think that's partly cultural. Selling a business in Asia can be a loss of face. It can be something that's seen as being, a
bit
failure.
Of a failure? Interesting.
Yeah,
okay.
Whereas in other markets that might be seen as a sign of success. I've sold my business. So I think there's a cultural element to it, but I also think that there's issues in some of the IPO markets which create problems in this area.
I was going to ask you about IPO because as an exit, because there is a very large tours and activities player out in Singapore that potentially might have floated, but now potentially won't. And so generally, how much are IPOs being put off given the situation?
I think a lot. Yeah. I mean, there's the market sentiment issue. But I think, as private equity has grown as an alternative source for late stage funding, IPO has become more questionable.
Right.
And, it's, if you look at cost of capital, you look at due diligence, you look at all the regulatory issues associated with IPOs, you'd have to say that, that's a questionable route to an exit compared to PE now.
I also question whether, the whole SPAC debacle maybe burned people that potentially contributed to thoughts around IPO as well.
100%.
Yeah.
And, there's not a lot of good examples of SPACs, and the most
successful
famous
ones.
Yeah, that's right. And the most famous in Singapore being Grab, which has been a big value destructor. So.
And they probably, Grab's kind of interesting, isn't it? Because they, given the sort of the volumes that they would be, that their business, their sort of transactions, they probably didn't need to go public by a SPAC. I'd have thought they could have gone by another route, maybe.
Well, you're right, and I think the Singaporean government did a lot to try and attract them there as a homegrown startup with a brand like that. They would have loved to have seen them, but it says a lot about the Singapore market as an IPO destination. The fact that a group like that, with such a strong brand and such a lot of push from the authorities, chose not to go that route.
Yeah. Now, what's interesting is that, there is money out there. There are, some of the big players announced significant rounds last year, but that didn't go into travel. I think we all hoped that some of it would, funnel into travel, and that didn't happen. But is that because it's, is that again completely down to the uncertainty? Is it because there are more exciting things to invest in? Why is this ongoing lag, do you think?
Yeah, well, we've got these famous letters out there, AI, right? Which is like a huge vacuum cleaner on the funding sources at the moment.
Yeah.
And unless you've got those letters at the end of your domain name or somehow embedded in your company name, you're not getting capital. And so I think that's one of the factors why our industry has suffered a bit. Now, there's a lot of people who are applying AI tools. I mean, that's what we're here for this week, is to talk about how AI interacts with our industry. So I think we'll start to see a flow of money coming into AI tools around our industry. But those earlier AI tools that were launched were the ones that took a lot of capital, and I think that's had an impact on our industry.
So to travel.
To travel as a sector, that's right.
So do you think, because, my hope would have been that we're sort of kind of going beyond the AI hype now. It's especially in travel, because you can't just stick AI on the end of your business and think, that's good enough. You must be looking at these companies. What do you look at beyond AI right now that would make you invest?
Yeah, well, we're trying to figure it out.
And
it's not easy. It's moving very, very quickly, and you're seeing founders who are taking some of the existing tools and applying them to our industry, which is, we've seen quite a bit of that in the last 6 months. A lot of founders have knocked on our door and said, okay, we've taken some of the proprietary tools that are out there, we've applied it in this way, we're solving this problem. Is that a business model that's going to generate the sort of returns that a venture capital investor like us needs? So we haven't made any bets in that regard. But I think, the challenge is for us at the moment in this industry is if you think about a hotelier who's looking to distribute their product, and you've now got literally thousands of different channels which you've got to manage as a result of all the emergence of these new tools.
It's another channel, yeah.
And it's becoming very, very hard. So, trying to pick a path, trying to choose investments at this time, and that's forgetting the macro overlay that we just talked about, is very hard. So we're sort of watching and learning and coming to events like this and having lots of conversations and just waiting for the dust to settle a little bit.
Okay.
And then I think we'll make some bets.
Okay. And do you think, as you look at the market, are you looking at a particular segment of the market? Obviously, hotel tech has been really attractive for some investors in the last kind of couple of years. Big investments going into the lighthouses of this world, etc. Muse, another one. Is it B2B? Is it hotel stack? Maybe it's airline data. What are you thinking there? Is there anything that you're particularly excited about?
Yeah, I mean, the distribution side of our industry is the one where you can really have some big wins.
Yeah.
And AI is obviously playing a role and will play a much, much bigger role. So we'd like to find some opportunities in that space. And there's a lot of people looking at it and a lot of people coming up with ideas. So that's the area that we'd like to. I think, the productivity tools that we've seen AI applied to, which was the first round of companies that walked through our door, it's a lot harder to convince a customer to buy a productivity tool than it is a revenue uplift tool. Yeah. So, we've seen some examples in the pitch competition just now. Productivity tools built around AI. I can save you X 0.5% or 1% on costs. And customers will go, can I really achieve that? Is it worth adding the cost of that tool in order to make that saving? That's always a harder sell than a revenue uplift.
There's also a lot of really smart AI people out there who go, well, actually, I can do this myself in-house, or my developers can do this myself in-house. Yeah. So I don't need the workflow type, tool. Interesting. Okay, so what about the rest of the year? What are you thinking? Is it more of the same? Are we going to get a little bit of, glimmer of hope? What are we going to see?
Well, I think on the macro front, I'm quite fearful about where we're heading at the moment. Okay. We wrote to our founders straight after the announcement of the tariffs.
Okay.
And said to all of our founders, guys, it's probably going to get harder rather than easier. Okay. Start thinking about costs.
Tightening your belts.
Tightening the belts, etc. Yeah. Preservation of cash. If you've got any new funding that's there,
Runway.
Don't haggle about terms. Take the money and put it in the bank. Okay. So that was the messaging that we gave out earlier in the year when the tariffs were announced. And I guess the thinking there was that, this is probably round one. There's going to be more issues. There's going to be more challenges ahead. Our industry, being largely discretionary expenditure, is being affected by sentiment.
And whole-scale layoffs in the
That's
US
right.
as well. So,
Exactly, yeah. And then you've got, the whole geopolitical situation, which affects our industry as well, where, people are saying, well, do I really want to travel to that country now with these tensions going on globally? So, we're pretty worried about the macro, and that's adding a degree of caution. So I think, the next 6 months for us will be about looking after our portfolio, making sure that, they get through the challenges ahead. We might make one or two investments cautiously, but it'll be also about preparing for exits and making sure that our portfolio is ready to exit. We're getting to the end of our current fund life, so we've got to get that aspect of our business ready.
And does that then, the whole kind of climate, precipitate M&A, would you say? Because we are seeing quite a lot of those deals being done.
I think it does, especially at the mid-level. I wrote a blog recently called The SME Trap, about the startup who went and raised a bunch of money straight after COVID, when there was quite a bit of capital around, and then has struggled to scale. They've been getting lots of messaging from their funders about profitability. So they've the growth curve has flattened out. That means the next round of funding is not there, and they're kind of in a trap of being an SME and not being able to break out of that.
And a true story?
Beg your pardon?
A true story?
Oh, yeah. We've got our fair share of companies in our portfolio in the SME trap.
Interesting.
Yeah, and there's certainly, I think every VC out there who's honest with themselves has got their SME companies that are, just not going anywhere. So what do you do with companies like that? You put them together with others.
Build platforms.
Yeah, that's right, and try and create some scale through M&A. So I think we'll see a bit of this. It'll probably tend to be share swaps and things like that rather than, cash buyouts. But hopefully that can help companies get up. But that needs obviously the founders. You're putting two companies together, what happens with the founders? So
and
there's always
realistic valuations, because sometimes those founders, they
Yeah.
get upset about knocking zeros off.
Yeah, that's right. Yeah.
Great to talk to you, Nick. Thanks for joining us.
Thank you for having me.